Hi, and welcome again to another edition of Market Analysis for today, August 6th of 2024. I'm Giovanni Benacour, analyst, trader, and educator with Vantage. All right, and let's get right to it. Yesterday's market plunge looks intimidating. Yes, stocks have been wobbly recently after repeatedly hitting record highs for much of this year. The last one was a month ago. But suddenly, the floor fell out and the descent was rapid. This caught much finger pointing in the search for something or someone to blame. This isn't an academic exercise. The key to not getting caught out in the future is understanding where things went wrong this time. Japan seems to be the obvious place to start. Hedge funds stood accused of overusing the carry trade, in which traders borrow at zero or near zero rates in yen and then invest in higher yielding currencies elsewhere. But this was always going to become less profitable as Japanese interest rates went up. Some are ready to blame the Fed for waiting too long to lower interest rates. Friday's jobs report showed the economy cooling down. And now people are wondering if an emergency rate reduction is needed before the next meeting. It probably isn't. The stock market isn't the economy, and the economy is still in reasonably good shape. Then there are those who say the hype around artificial intelligence was overdone, but it was always going to peak. The AI boom may not be over either. It's just that investors are getting more discerning about which AI investments are going to make money. The Monday sell-off could have been a perfect storm when all these elements unfortunately came together at once. Markets always overshoot, and usually there's more than one thing to blame. The bigger picture is that stocks are retreating after a long period of gains, which is normal, but it also doesn't necessarily mean it's time to invoke Warren Buffett's mantra and get greedy by buying up cheap stocks just because others are fearful. For now, volatility is the name of the game, and take a look at the VIX. So with that being said, let's take a look at what we can speculate to see in today's market fluctuation. So yesterday, we were speculating for the market to continue with that sell-off, but actually it rebounded and it recovered itself somewhat. Obviously, we're still with a big gap that in a way has kind of been closed today. So where will we go today? We'll continue trending lower, or will we just do some shoppiness, sideways trading, or will we spike and trade towards the resistance level? Those three obviously are the obvious. Which way will it fall? Which will the cookie crumble? Well, that is for us to be seen. Obviously, we don't have a crystal ball into the future, but everything is discerning, like I said. So let's keep our eyes peeled. Let's take a look at the S&P 500 and what we can expect. Our resistance was overshot, obviously. So let's just use that low from Friday as our level of resistance, and let's bring up our level of support to right about 5150. That's for the S&P. If we were to open right now, we'd be opening down. So keep that in mind. The Dow, which just really crumbled very, very strongly. So let's just see what we can speculate to see in the Dow. As the Dow is not loading, okay, here we are, loaded. So the Dow is actually the one that's looking somewhat green. So let's just bring up our level of support to 38,400. Let's keep that resistance there. So let's see if today the Dow will recover. The Russell is looking as well. To see if it recover, let's just bring up our level of resistance a bit more to 2100. Just made that nice. 2000 actually is going to be the one for the rest of 2000, support for the rest of 2000 at 2000. Crude oil, let's take a look at crude oil. So crude oil, whenever it loads, and it's not loading. All right, there you go, crude oil. So crude oil is looking to tank. Let's just raise a little support to $71. Leave that resistance there at 75. We are entering about just to enter oversold territory in crude oil. So keep that in mind. So yeah, might as well be selling. Nat Gas is entering a phase of sideways trading. So 180 is going to be a level of support. Let's keep that $2 as the resistance. So yeah, this is looking like it is going to be sideways trading. All right, so keep that in mind. Gold seems to look to recover. Let's just bring up our level of support to 2380. Let's raise a little bit more our level of resistance to 2430 and see if gold will actually recover itself or will it just continue to plunge. Silver, wow, 26.27. So let's just also leave 26 as a level of support, 28 as our resistance. More looking to be entering more of the oversold territory. Perhaps we'll see $26 today. Copper, again, below $4. Again, but just looking to sustain itself around there. So let's just use the lower band of the Bollinger Bands as our level of probable support. So most likely probably sell. Bitcoin seems to be recovering. That was a big wick. 50,000 is going to be the level of support for Bitcoin. 58,000 will sustain itself as resistance. Perhaps a recovery will suit well. Ethereum. So Ethereum, I'm still leaving 2,000 as support for Ethereum and 26.25 as resistance. Perhaps it'll just do some sideways trading today, shoppiness. The euro, after hitting 110, it retreated real quick. So let's just leave our level of support and resistance as they are. Let's see what will happen today. The pound is also looking, oh, actually pound is just, it's actually, let's use this level right here as our level of support and let's bring down our resistance to 128 and change. And the dollar index seems to be recovering, hitting that resistance 103. 102 is going to be the support. Let's see if it'll be able to surpass that resistance, but let's just let's raise it a bit more, 103, 200. Let's see if that'll sustain itself. All right, keep your eyes peeled today. Perhaps, most likely, let's see what will happen today in the markets. Will it continue to trend lower? Again, corrections are expected. A deep correction, or if the market retraces 20%, we are in a bear market. That's it for me today. Have a great trading day and see you tomorrow.